And speaking of top performers, 2013 was a blockbuster year for stocks, with the Dow Jones alone gaining over 25%. Some of the Dow's brightest stars were Boeing, with a whopping 81% return. American Express had a 58% gain, but there was one clear loser. It was IBM. IBM, Big Blue, the only stock in the Dow that finished the year in negative territory, with shares dropping more than 2% compared to the Dow's 26% gain. So should investors dump IBM from their portfolios, or could this be a great time to buy a cheap stock? Let's bring in Brian White, Cantor Fitzgerald analyst and global head of technology research, and Todd Lowenstein. He's Highmark Vice President and Senior Portfolio Manager. And gentlemen, welcome to both of you. And Brian, you know, it's a rough year for IBM, rough year for Big Blue, and you're very bullish on the stock. I mean, you've got a price target that's more than $35 above where it's trading right now. What do you see?
Well, I think, this year, 2013 was a difficult year for a lot of IT companies. So in my coverage, IBM wasn't the only stock that was down in 2013. And what we saw, emerging markets really started to weaken. China started to soften, and federal spending weakened. So it had an impact on IBM.
Your point right there, I mean, this is the world's biggest provider of computer services. And the fact that they didn't participate in, what many say was a global recovery is a bit surprising.
Well, I think as we move into 2014, some of these headwinds are going to change. So we have the bottom in the sales cycle in the December quarter, down 8% year over year. Mm-hmm. So I think 2014 will be a better year for them. And by the second half of the year, we'll show growth again.
Okay, Todd, what do you say to that? Because you were a shareholder of IBM and you exited the stock. Brian just said that he sees things getting better this year for them. Do you agree or disagree with that?
I agree. From a cyclical basis, things will get better for IBM. The problem IBM suffers is both real and perceived. On the real side, as was delineated, was the real issues in terms of sales growth. They also have some issues in terms of financial engineering to their earnings. Half of their earnings come from buybacks and favorable tax treatment, asset sales, and things of the like that the market doesn't put a high multiple on.
So earnings growth is one of the big concerns for you. It's earnings growth at the company, despite the fact they're a dividend-paying stock.
Yeah, they put up double-digit earnings growth, but half of that growth has been buyback-related. So when you exit buybacks, it's not as robust. My concern more is the perceived risk here. And IBM, like it was mentioned, is not alone in this. They are not viewed to be levered to the big trends in mobile, cloud computing, which is infrastructure and software as a service, and big data. And their moat, which considered pretty wide for a while, is considered to be shrinking and eroding. And the market, as a result, is assigning a very low valuation to them. They're playing defense here, and the market doubts whether they can execute in kind of a new paradigm of cloud and software as a service.
But Brian, you're bullish on the cloud side of the business for IBM. Respond to what he's saying here.
So, I think Todd brings up some good points. The cloud can be a positive, it can be a negative. And so cloud business is up 70% year to date as of third quarter 2013. So they've done well in that area, but it also impacts some of their other businesses in a negative fashion. I would say, big data analytics, I think they're very well positioned. People that I talk to around IBM's presence in big data and beneficiary of analytics over the next few years, they feel very bullish about IBM. And that's a business they expect to double by 2010 to 2015.
Interesting. Todd mentioned financial engineering. I mean, he's got some questions about, the stock buyback, things like that. Does that cross your radar at all?
Again, I think Todd brings up some great points. IBM, when they take a restructuring charge, typically they don't back it out. When they have a lower tax rate or a positive gain, they don't back it out. And you kind of net it together. But so when I look over the past 5 years, IBM has grown EPS 16% a year versus 4% for the S&P, yet the stock trades at 10 times, the S&P's at 15 times.
I mean, Todd, to the point, I'm curious if you would ever reconsider, getting back into IBM because, truth be told, just in a general sense, isn't it buy low, sell high? I mean, this could be a great deal right now with IBM being the only loser in the Dow for 2013.
I agree. The contrarian side of me says, yes, you should be looking at this stock, and good things happen to cheap stocks. The question is IBM a bargain? And I think you need to get a better handle of the fundamentals, and can they pivot and capitalize on the secular trends that are out there that are threatening their business, the core infrastructure integration business. And there are doubts about that. They made an acquisition recently, which I think is a step in the right direction. I think the market wants to see more of that. They're going to have to be active in mergers and acquisitions and developing this internally through high reinvestment rates. I wouldn't doubt IBM. They've made this pivot before in the past. I think they can do it again. I think the jury is out. But the market is not discounting any favorable outcome at this point.
It's been a rough
I think the
year for
perceived
them.
risk exceeds the real risk.
Yeah, it's been a rough year for them, but we'll have to see. Brian White, Todd Lowenstein, gentlemen, thank you very much. Great debate. Appreciate it.
Thanks.